Let's take a look at the heat map to find out. Alright, this is our baby here. United States GDP of 23.3 trillion dollars. The current interest rate is at a 5.25%. The inflation rate is at 4.9%. Jobless rate remains at 3.7, and all that from a population of 334 million. So, will the CPI instigate the Federal Reserve to have a change of mind on the pausing of the rate hike? Because, see, with the job numbers and being stable last week, before the unemployment claims was issued, Federal Reserve are pretty dovish about rate hike, meaning they are pretty comfortable with the current number of 5.25%. Although the ceiling that was first planned last year was at 5.5%. So there is a possibility of another 25 basis points hike coming tomorrow during the FOMC minutes of meeting, and also when they issue the Fed funds rate, right? So will tonight's CPI numbers influence the FOMC to change their mind? Well, I can't read their minds, so we can't read their minds anyway, so we can just make a guess. But fundamentally, the interest rate has done its job of keeping the inflation rate down, right? But only last Thursday's unemployment claims makes it a bit tricky to gauge the inflation numbers. And when the inflation numbers are that tricky, FOMC may want to decide on a reverse to their flagged pause rate hike. See, in June for this month's FOMC meeting, almost all of them unanimously vote that okay, they will pause the rate hike, and there were also voices that it's time to cut the rate. That is only a very minor voice, so I doubt the majority will want that, but we will see what the inflation number tonight will do or will change their minds of the FOMC, but definitely it's coming for in the July numbers. So are we going to be concerned about the CPI numbers? Well, we can't tell, but our concern will be as traders is to see the market reaction. All right, so tonight at 7:30 my time, 8:30 for those of you at GMT +8, try not to be in the market. It's going to be a rock and rolling, so it's best to stay away. Do not have an open position in the market during that period of time, because the high impact data may cause the market to shake, go up, come down, go up, come down. It may just hit your stop loss levels and then it go in your direction after that. So my advice is stay off the market, stay out of the market at that time. Come back only about 15 minutes or half an hour after that. When the dust has settled, then the market will start to move according to its previous trend. So, and one more time I say, please practice capital preservation. Do not get caught with your pants down. Better not to be in the market only after the event has been issued. All right. So, what else can we share on the fundamental side of things? Let's take a look at Bloomberg. What does Bloomberg has to say? See, the notion among analysts is that the Fed are pausing because Fed have signaled that it's taking a pause, taking a break from the rate hike. But as the headline goes, as Fed signals rate pause, Powell will have to placate the hawks, because quarters, uh, certain quarters within the American economy wants the rate to be higher, up to the ceiling of 5.5. But portions of it say, okay, never mind, no more rate hike, enough, because inflation number has come down. But still, it's at 4.9%, which is way above the target of 2%. So there is still a possibility that the rate hike will come back, not in June probably, but probably in July. But we'll have to see what events unfold in these coming days and following week. Then only then we'll know whether the Fed will decide to do a rate hike or not. That is coming in July, but that's way too far for us to monitor. We just do it on a day-to-day basis, and fundamentals usually good for hedge funds and position traders. Me, I'm a retail trader and I'm a day trader. I get in and out of the market on the same day. To know the fundamentals is good, especially to know when the news or the data will be released, and I will not be in the market when the data is released. I'll come back 15 minutes or half an hour after the data is released to see the market reaction. If the market reacted the same way as my perception, then I'll come in again. But if it's not against my perception, then I'll wait. I'll observe. I'll watch the market. Where it's gonna go. And I suggest you to do that. Why? We need to preserve our capital and wait for the right moment, wait for a better signal, and when it shows, then we are ready to enter the market. Okay? I think that's about all that we can share on the fundamental side for the CPI, because the numbers sometimes they go through window dressing, so it becomes unreliable, and that is not a nice thing to do, because we get tricked, we got spooked, which is not nice. So it's better to go technical, and we are going technical now. And let's see, who do we have? Jenny. Hello, Jenny. Smith JT. Hello, Smith JT. Welcome back. Oka, sir, please check 1 hour time frame upper trend line. There is a proper breakout and retest. Hi, Oka. Welcome back, Oka. Which asset class are you referring to, Oka? 1 hour time frame upper trend line. Let me know which asset class, then we'll go to that. Mr. PR, hey Mr. PR, welcome back. Good to have you back. Wouldn't be surprised if this can still reverse for the 4 hour closer. Maybe. Well, what I want to show you is what I want to check is the dollar index, actually. Right? And we want to see, does the fundamental events shape the technical side of things? Alright? Okay, here we are. This is the dollar index. Excuse me. As usual, we start with our daily chart. This is the daily chart of the dollar index, and see, yesterday it went up, went down, went up, went down, and went up, closed up, and today the opening at above the MA 125, and it has been sliding, and it's being supported by the MA 75 plus the monthly FIBO of 103.193. Okay, so it looks bearish, right? And for those of you who understands Japanese candlesticks, I want to point out to you, what we are having now is a bearish continuation pattern. This is the bearish candle, or the bearish Morobozu, or the bearish tower. This bearish tower covers the mid band of 15 BB, covers the mid band of 25 BB, and also covers MA125 and MA100. This is the first signal that the bearish continuation will take place. Following that, we have two advancing soldiers, small bullish candles, not covering above the 50% of the Morobozu. So these two advancing soldiers is being covered by the current candle, which is a bearish tower, but although a small one, not because it's not the end of the day yet. So when prices remains the same, or if the dollar index does not go above 103.335, we can safely say that the American bears are in the market and it wants to push the dollar index down, technically speaking. So will it do this? Will it do as the trade setup says? We have to watch. But one more thing I want to share with you is the momentum line, the 10 moving average, already crossed the mid-band of 15 pp, already crossed the mid-band of 20 pp. So this is the initiation of a bearish momentum. This is the confirmation of the bearish momentum. Okay, and the trend signal is flat. The trend signal will come later, but candles and momentum line is telling us that the bears are in the market. Now let's take a look at H4. H4 currently is telling us that the bears are taking a break. Why? Because it has reached the point of AB weekly 103.252. AB weekly is the low of last week. So usually the low of last week plays an important role. It might be tested once, twice, and by the third time, it is usually compromised or broken. Will it go down lower? Very high possibility, because if you look at the momentum line, it is running away from the mid-band of 15 and 20 pp. See this line, the red line? Right. That shows that the bearish momentum is still here. And you can see the trend ribbon. It was large gaps and now it's being compressed. It's about ready to be compressed, then flipped. Right? But in the meantime, it's the bears are taking a break. They came last week. This week they earlier in the week, and today is the second day of the week. They drop a bit, and after hitting a support at 103, 193, and then there's another support at 103.252. Last week's low, the bears say, okay, I'll take a break. I'll have some coffee, like what I'm having. Cheers. So now let's take a look at the H1 chart. H1 chart is really testing the support. Why? This is the third attempt, and current what we see earlier. Am I blocking you or not? Okay, I'm not. Good. See, this is the daily channel cross, and there was a candle there, and from that candle, price go much lower. It just goes sideways, and it is currently being supported by yesterday's low, AB daily and plus the AB weekly. So 103.252, 103.239, that happens to be a tough support. All right. Now, will this tough support be the base for the dollar index to jump? We have to wait about 3 hours time before, and when New York opens, only then we'll find out when the CPI numbers are up. In the meantime, in 3 hours, can price go up to 103.240? There is a possibility. So take a look at the smaller time frame of M15. Okay, we are at the M15. And what we are seeing, M15, is a formation very popular, which is known as the double bottom, right? So this current double bottom is forming also a morning star. So when this forms a morning star, meaning this bullish candle have to close around here, 103.279, then it is confirmed that a morning star is present. So we might be able to see dollar index going up to 103.436. So in about 3 hours time, or 3 hours time, we are looking at this level. This will be the target for the dollar index to be at 7:30 later my time, 8:30 your time, when New York opens. If it's around this price and it cannot go up further, then the dollar index will come down. It is a weakening dollar. But if it goes above 103.498, then we are looking at a rebounding dollar. But knowing what analysts are saying, that the Fed is dovish, and then the unemployment claims last week was a scary figure. It pushed the index down, the dollar index down. There is a possibility, looking at H4, it is a bearish continuation pattern. Yes, we may see the dollar index falling down, but don't take my word for it. I hope I am wrong. Let them issue the CPI numbers. Let the market decide where it wants to go. Once it's confirmed, only then you partake in the market again. Okay? Right, so that is the technical side of things. Now, those questions, Oka, you wanted to see what's the trend line. Please let me know which asset class are you referring to. Then it'll be much easier. Okay, and let's say hello to the audience. And I'm done with the dollar index. I want to see what's happening to the other currencies, the other asset classes. Okay. Mr. PR, please let me know. Reverse 4-hour closer. Oka, good forex trader, 1986. I don't know what you're referring to. I'm sorry, I don't get you. Okay, forex, just take what the market gives you. Agree? Agree. Let the market tell you where it wants to go, then you follow. You don't tell the market what to do. Welcome, Mr. K Forex, and welcome back. Good to have you. Lisaya, hi. Hi, Lisaya. Good to have you back. Rita Khidrau. Yes. Time frame 1 hour, there is a pin bar down. So I suspect that you guys are referring to gold, right? So gold going down. Okay, let's take a look at gold. Yeah. All right. Gold is going down. Possible. Right. So, see, gold at the moment, since the middle of last month, is being held back by the bogeyman. The bogeyman is this line, the A5 at 1962.80. Why I say it's a bogeyman? Because it acted both as a support and as a resistance from middle of last month. And it's coming to the middle of the month. So it has been about a month. 1962.80 became the bogeyman, meaning prices are not being able to lift that far. Yes, it can test, it can penetrate, it come back the following day. See, let's say it started here on the 18th of May, it tested, it went down. 19th of May, it came back, went up. 20th, stay up. 23rd came down, went up again. 24th came down, 25th came down, 26th down, and early June it went up. 2nd of June it come down. See, it all plays along that particular trend line, that particular Fibo line, which is 1960 to 80. And for the past 2 days, yesterday and today, yesterday it tested a bit, cannot break the yearly channel, it came down again. And then today it is trying very hard to break up, not possible. So that is why most of you think that gold will come down. There is a possibility. How far will it go? Let's take a look. Let's see H4. Right. H4 is telling us that the market is mixed, but not enough strength to go up. It's been trying to come up, right? Last week it tested once, twice, cannot break. This week it tested yesterday, it came down. Today it's trying again, but this time only at MA 100, right? See this red line? MA 100 is the Bogeyman Junior. 1962 is the Bogeyman Senior. It has been a support and resistance level throughout the month. Will it break this time around? Quite difficult. Why? Because you see, there is a weekly channel cross. There was a monthly channel cross. It went through that. But the weekly channel cross is stuck because there is the MA 100 also acting as resistance. So possibly it will pull back. How far will it go? I would say it might go to 1957 or as low as 1951. Okay? And the momentum line, though, is telling us that the bullish momentum might be coming soon, because this is the first level, and the 15 and 20 BB midband is at the same level as the momentum line. See, this is the 15 BB, and this is the 15 BB, this is 20 BB, and this is the momentum line. It's all there. So it is acting as a support, right? Will it go up or will it come down? Excuse me. Well, let's take a look at the smaller time frame, H1. H1, the previous candle is a Morobozu covering the Bogeyman, and current candle wants to go past the weekly channel, not possible. It got stuck, and it's trading above the Bogeyman, 1960 to 80. It is going sideways, but if you take a look at the momentum line, see, this is the MA10, right? This MA10 is running above midband 15 BB and above midband 20 BB. This is a bullish momentum signal. So there is a possibility for the bulls to come back. We have to wait and see, because this bull has been in the market since last night. After forming the tweezer, it climbs higher and higher and higher and higher until from the bottom band of 20 BB all the way to the top band of 20 BB. Now the weekly channel is acting as resistance. It may want to push further, but it is going sideways first. Maybe the bulls got tired, now taking a break, taking lots of food and drinks, gather some strength, or they say consolidation. So let's take a look at the M15. Let's enlarge this. Okay, M15 is telling us a different signal. It is a confusing signal. Why I say it's confusing? The trend ribbon has flipped. So the trend is telling us that it is the initial bullish trend because the three lines are beginning to separate. Okay, the candles are telling us we have an evening star, but there is no confirmation candle because the fifth and sixth candle is a failure. Okay, so it formed another evening star, and yet there is no confirmation because the fifth candle is a failure. It becomes bullish. Why is that so? Well, the momentum line, this red line, is forming a support, and prices currently is above the bogeyman of 1962.80. That is why it is rebounding up. And for the next hour, or at least half an hour, the first target for this current bull is to go at 1966.75 or 1966.70, because there is a channel cross between the daily and weekly channel, and then the brother of the bogeyman, which is the yearly channel, which is here waiting to be tested at 1969.80. And looking at M15, I would say gold is bullish at least for the next hour or so. Okay, but it can be tricky in the next 15 minutes because the 15 BB top band is turning south and it is resting at the weekly channel. So the price of 1964.70 will be critical. Okay, so I hope I've shed some light, and I hope it is useful for you guys who are trading gold. Let's take a look at M30, see if we can see a different story. M30 is also telling us that the bulls are here. Why? Because the trend ribbon is beginning to split. See, when the trend ribbons open up, it means it's the beginning of a trend, and this is a bullish trend. Although you can see the trend actually started last night, and it is continuing, and we are already in the middle of the day, middle of a 24-hour day, right? And prices for the current candle is above 1962. The next target most likely will be, I think this one is already passed, because if you look at the timing, it has passed by 1 hour already. So I suspect the next target will be around here, and that is another 3 hours to go. So in about 3 hours time, when the CPI numbers does make the dollar index weak, so gold will go up, and most likely the first target will be at 1970, 1971, can be as high as 75, and gold's daily range is about $35. Yesterday's range is only $17. Now, if today, if it's going to play out a full range, let's say this is the bottom and you want to go up by $30, we are looking at around 1983, 1985. That's the likely target of gold. Yep. Sorry, 85, yeah. Okay. There's another yearly channel up there. So we are looking at a bullish gold. That's about 35, yes. Okay. So just watch the market. That is my perception. That's how I read my charts, where the market telling me is going. I may be wrong, because market dynamics changes every other hour. And by the time the Yankees or the Americans get in the market, they may have different perception. Then when the numbers of the CPI got issued, then they have change of mind. That's where market dynamics will come into play. And one of Charles Dow theory is that the market will go wherever it wants to go, regardless of what we think or how we analyze it. In other words, it's the market is free to move. Yes, we have indicators to help to guide us. But if the market wants to move, there is no way of stopping it. What we can do is, if it's not going in our direction, we get out. Then we see whether we can join the market in the direction they are going. That is all to it. So, in trading, there's very simple law. When we are right, we get paid. When we are wrong, we pay. It's as simple as that. So try to get right, try to be right, and analyzing it clearly. If after analyzing and still I'm proven wrong, it's okay, no big deal. There's always another, bring on the next trade. Or if today is not a good day to trade, there's always tomorrow. Alright? So there is no Superman in the market. Maybe some people claim they are super traders, good for them. I'm not a super trader. I'm just like you. A very ordinary guy. My advantage is that I was born earlier and I started trading earlier. That's it. And the little knowledge and experience that I have, I share with you. So that, you don't suffer that much losses. Okay. I think I've done the goal, and let's see any other comments. Wait. My opinion, the trend up is over. Lisaya, well, I did say hi, right, Lisaya? Welcome back. Gold going down. The bigger time frame shows yes, but smaller time frame says gold possible to go up. So we have to wait and see. All right. Next, Aurel Pan. Hey, Aurel, welcome back. There is a trend line that can't give breakout until 1970 hits. 1970, that's a pretty long way to go. We are still around 63. Aurel. New. Good afternoon, sir. What do you think about Euro USD? Oh, new trades Euro. Okay. Hey, welcome back, New. Welcome back. Let's take a look at Euro. It's been a long while since people asked me about Euro. Okay. Right. With Euro, I can safely say that it is going on an uptrend, and when Euro goes up, dollar index comes down. That's how it works. So there is a hint, okay? I would say it will, but there is a hint that it might come down, right? So why is the Euro going up? Technically, it has reached its bottom of the year. Sorry, the year's low is in March at 1.05152, and that is what most analysts are eyeing at. So for the year 2023, the lowest level for Euro, the consensus says that is at 1.05. Where is the target for Euro? Above 1.15. The year 2023. At the moment, it's trading at 1.08. Halfway there. So, will it go up higher? Very possible. Why? You can see that this is a rounded bottom, and there are dojis pointing that the bearish trend is over. A slight double bottom, not perfect, but there are many bullish morobozus. 1, 2, and the current candle is a bullish morobozu as well. So that shows that the bullish continuation is in place based on the daily chart. Let's take a look at H4. Okay, H4 is telling us that the bulls are taking a break. Why? Yesterday or last week, it fought a battle with the trend ribbon. It won the first round. It lost the second round. Early this week, yesterday, it fought and it won. That is why Euro is trading above the trend ribbon, above MA 125. But it got resisted by the top band of BB20 plus the monthly FIBO of 1.080888, 1.080888. Right. So forming a gravestone doji at the moment, and usually the gravestone doji tells us that it's time to take a break. When this gravestone doji is formed in about 20 minutes, possibility of euro pulling back down to 107,874 is there. So there is a possibility of a pullback for euro based on H4. Let's see H1. Yep, H1 is telling us the same thing because it has passed the channel cross of the daily and weekly channel, which is here, 1.07907. This is supposed to be a tough resistance, but it has broken and this level has become a support, right? So when euro pulls back, the first level it will go will be here, 107,897 or 079. 1.079 is a good level if you want to buy euro because that is a good support. It will pull back up to there. The lowest I would say at 1077. So it's between 1077 and 1079 is a good level to buy euro. Euro can go as high as 200 points. 1,500 points. And could it be here? It can go to 0.878, possible, right? So it all depends what the CPI numbers and the reaction to the CPI numbers will do to euro and the dollar index. At the moment, it has tried to come up during the Asian session and the opening of the European session. The European bulls keep charging in up to the point where it hits a daily channel, it hits a monthly FIBO, and the bulls say, I'm tired, I take a break. So it's going to pull back. How low will the pullback go? Let's take a look at M15. Right, M15, we have an evening star with a gravestone doji in the middle. This is definitely a bearish reversal. And as we said, the first support is here. This is yesterday's high at 0.7895. The next support will be around here where the channel cross plus where MA 125 will meet, and that is 1077. So if you are a stingy guy like me, I'm stingy on SL, I'll wait until it goes to 0.77 before I buy. If I go up here, it might just stay for a while, then it drop down a bit here, then it come down. Then if you go further, that means my SL will be very large. I would rather wait until it's the trade signals is clear, the trade setup is clear. Only then I'll enter the market. At the moment, if you want to do a short sell on euro, there is a possibility. If I sell now, I'll be fighting the trend, which I don't like to do, so I'd rather wait. Okay, that's M15. Okay, new. Euro is bullish, but it's doing a pullback. I'm looking at entering the market again at 0.79. All right. I hope that answers your question, new. Next, who do we have? What's happening? Okay, Lisaya says that if it breaks that DCFX level, I'll look for some sales. Yeah, possible, possible. Uh, for gold, you are referring to gold, right, Lisaya? Let's take a look at the gold again. 1962, you want to sell? Yeah. It is possible. You see, gold is pretty tricky, and tricky moments like this, I rather stay out of the market until I can see a clear uh, trade setup. At the moment, it's quite tricky. Okay. Anyway, next. Naushad Bennett, US 30 and Nasdaq. Okay. Naushad, welcome. Welcome to DCFX Asia daily live stream. I hope you enjoy yourself here. Let's answer your request of US 30 and Nasdaq. Right. It was bullish the other day. Let's take a look at US 30 Dow Jones. Okay. On a daily chart, the bulls are in town. And it has got a lot of support from the indicators because the trend ribbon is all turning up. The momentum line also shows a bullish momentum. It has been climbing from the first day of June until the 13th of June. There is a possibility of it going higher. I'm looking at a target of say 34,615 in the coming days, maybe till the end of the week, right? But point to note is the climb has been gradual. Small bullish candles, 1, 2, 3, 4, 5. Currently is forming still a bullish candle, very small. So candles like this, when they jump, they might jump up to maybe up to this level here. Yeah, 34,615. There is a possibility that US 30 or Dow Jones hitting that mark by the closing of the day, based on uh, daily chart, trend ribbon, and momentum line, which is showing bullishness. Now let's take a look at H4. H4 is telling us the same thing, and it is a more gradient climb. Usually gradient climb lasts longer. So yes, possibility of going up to 34,394 first before go 34,615, right? Dow Jones is bullish, H4, daily chart, okay. On a hourly chart, it's doing a pullback, and this pullback may want to test this level, 33973, because at this level we have the weekly and daily Fibo converging on the same price. Excuse me. And that can happen in about 4 hours time. That is during the New York hours. Then it might rebound, or they might just converge here at 34042, rebound. The first target will be 34188, and it can be very ambitious to think to go up to 34325 and 34615, way up higher. Well, DJI is bullish. Now shut. Okay. I hope it's useful. Next, you want to look at Nasdaq. Where are you? Okay. Nasdaq, let's take a look at the daily chart. Wow. It is bullish. It is sitting on a very good support of a yearly channel and a yearly Fibo. So the next target is the next yearly Fibo at 15,128. Very reachable within today. All right. Nasdaq is bullish. because the momentum line is telling us the momentum is bullish. The trend ribbon also telling us the trend is bullish. Can we wait for a pullback to buy, to go long? Maybe. Let's take a look at the H4. Let me enlarge this. The pullback may come to around this level, 14,783, because there is a daily channel cross and a monthly channel. It may form a support because that's where the momentum line is going to meet. Then it will still go up again till about 15,018 or 15,082. Possible, because the trend is all showing up north. That is H4. Let's take a look at H1. Right, H1 is doing a pullback. Okay, so this pullback will be done once the momentum line crosses the 15 pp, then the 20 pp midband, then it plays around here about 3-4 hours time before it goes up again. H1 is telling us it is bullish but doing the pullback. The pullback level is around here at 14,756. Next is M15. This is too big. Alright. Now, this plus A3 is a 50% of one positive cycle from last week's high low. It will be a significant support because MA100 will meet this level, 14,785, in a matter of 2 hours. So, if price was to come down, stays here for a while, then the market opens, then the CPI numbers makes the dollar index go down, that means Nasdaq will go up, right? So, stock market against the dollar, if against the currency. If the currency is weak, the stock markets go up. If the currency is strong, the stocks will come down. Why? The theory behind it is that investors will borrow money to go into stocks, or investors will liquidate the stocks to buy more currency. That's the theory behind the movement of currency against the country's stock exchange or stock markets. It is an old theory. It can be useful. It can play out sometimes, not all the time, but that's just sharing this bit of information. All right, so we're done with Dow Jones, we're done with Nasdaq. Let's see who else we have. Gold Walker looks good. All right, happy to know the gold looks good. All right, FX Ticklets, Adrian. Hello, Mr. Abe. Hello, Adrian. Welcome back. You ask about gold and US oil today till US news. Thank you. Come back. I mean, you're welcome. Oh, now that I've shown you the US 30 and Nasdaq. New. Thank you, sir. Oh, come back. I mean, you are welcome. Right. That's for Adrian. Gold, I've done. Gold. All right. Oil. Okay. We haven't done oil today. We did oil yesterday, but today no. Okay, let's go for oil. See if it's still bearish or oil is already coming up. Dang, 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 dang. I just want to share a wild idea. Right, Adrian? See, this is a double bottom. Disregard this morning star. We disregard this. All right. We just look at these two bottoms. One, we have a bullish engulfing. Here at the moment is a bearish harami. Bullish harami. Now, what will happen is, because at the moment this bullish harami is resting at, wait, am I blocking you? Oh, my bad. Sorry. I didn't know I was blocking you. Why do we have that ugly guy blocking the chart? Okay, now better. Sorry, back to, let's rewind and play. Click. Right. We have here a double bottom beam form first bottom is a bullish engulfing, then it went up. After testing, not even reaching MA75, it comes down. Okay, now here at the moment, it is being supported by the monthly Fibo plus a monthly channel cross. This is a good sign of a bullish reversal. Okay, so this double bottom, bullish reversal, most likely target will be 72 points, go up by 72 points from 68,200. You will want to go to 81,565 in a matter of 2 weeks. Not that instant, because we are looking at the daily chart, right? But it is a bearish trend, but a bullish reversal signals are there. The morning star did not do much. Yeah, it appreciated by as much as $50 or $5, sorry. Then it come down by another $5 or $6. So possibility of oil WTI going up is there. The trick is the dollar comes down, oil goes up, because oil is traded against the dollar, right? So if the dollar comes down, oil will go up. Dollar comes down, euro will go up. Dollar comes down, gold will go up. That's the theory behind it. But real works, just watch the market. Okay, from WTI, let's go to Brent. Brent is doing the same thing. In fact, Brent is more prominent for a bull reversal. But then again, we have to wait. Right? The CPI numbers is a much awaited number. So only then we can tell, can the dollar index stay up based on the CPI numbers, or will the CPI numbers make the dollar drop further? The reaction of the markets. All right. So oil is bearish, but a potential bullish reversal. So watch the market. Just watch the market in the coming 2.5 hours. Then we can tell where it is going after that. Okay, Adrian? I hope that is useful for you. Let's take a look at H1. Same thing. It is bearish, but it's about to reverse. WTI, H1 of the Brent, same thing. It's more of moving sideways before it's going up. So just be patient. It might want to go up. No clear particular signal yet, but just wait and see. Okay, that's it. What else do we have? All right, so ladies and gentlemen, that's all we have for today, and thank you for attending. Thank you for viewing us. If you like this video, please, you my friend, give me some thumbs, baby. Some thumbs, please. If you think we are useful, tell your friends about it. Subscribe to our channel. Give us a thumbs. We are here every day, Monday to Friday. If you have some ideas of how to make this channel interesting, or how to make you want to see us more, let your friends know. Any suggestions are welcome. Any criticisms are also welcome. All right, I'm learning. I want to learn. So if you tell me where I go wrong, I'll be happy. I won't get angry. I'll be happy. The main idea is, if I can be useful for a lot of people, I'm happy. All right. So, ladies and gentlemen, thank you for your time. All you beautiful ladies, you handsome gentlemen. I hope I had a good time. I hope you had, and it has been useful. And whatever you do, don't worry. Be happy. Stay healthy, and please trade wisely. Gotta go. Have a pleasant evening. God bless. See ya.